So here's a question. Could a potential bidding war be brewing for Google Chrome before it even splits from Alphabet? OpenAI CEO Sam Altman is reportedly interested in buying Google Chrome if the U.S. government forces parent company Alphabet to sell the web browser. This comes days after AI startup Perplexity offered Google $34.5 billion for the internet browser. Our countdown closer is also betting big on the Chrome parent, calling it a prime player set to cash in on the AI gold rush. To retirement income source partner Jeffrey Small. Jeffrey, good to have you. Okay, make your case on that one.
Sure. Well, I mean, Google has a fortress. Their ecosystem is a fortress of incredible AI. They have zero competition globally. The Android platform has enormous reach. They have 2 billion users a month on their overview AI right now, and they blew out earnings by 19% and just announced a $70 billion stock buyback. They are also the most undervalued Mag 7 stock out there. And as we know, Brian, the Mag 7 has carried the market this year and has actually carried the market for the last 5 years in terms of the total returns on the S&P, and now make up 38% of the market cap weight.
So I hear what you're saying there, and a guy might say, well, your picks, Jeffrey, are Mag 7 picks. Are they not just a little stretched to still be your picks at this point? I mean, I hear what you're saying, but it kind of sounds like a reason to maybe not make them your picks right now.
I love when everyone says, you know, they're overbought, don't buy them. Nothing could be further from the truth, Brian. They had 26% earnings growth year over year. The collective multiple, excluding Tesla, on just the Mag 6, excluding Tesla, is at 33 on the forward price to earnings basis. There's nothing wrong with that multiple. I would encourage investors to buy the dips on these companies because as they integrate AI into their platforms, they achieve more productivity and more profitability. And that is going to get actually better and better and better as time goes on, meaning the companies are more profitable, earnings go up, hence the stock price rises. So nothing could be further from the truth. They are not overbought.
Okay, so in that group, who are you picking as the folks who might be able to catch? OpenAI, ChatGPT seems to be the front runner here in the AI race. Among the Mag 7, who do you look at and say they can catch them, they can take them? What do you like there?
Well, I think, you know, Google's a close second to ChatGPT right now. They've got 2 billion users a month on their overview. They're really going to be, I think, to have the knockout punch going forward from a stock growth standpoint. And they have an advantage over ChatGPT that Chat doesn't have. They have YouTube, they have enormous searches, they have the Android platform, and then they have the internet platform. And so you can't beat that moat. I really like them a lot. I love Tesla. I think Tesla's a screaming buy right here. You know, they're looking at being in 12 cities before the end of the year on the robotaxi, and as that expands on the robotaxi basis, you will see the share price go up regardless of multiples. And of course, you got to throw an Nvidia in there. Nvidia is definitely a keeper with, you know, 75% of the world's supercomputers run on Nvidia chips. They dominate 80% of the AI modules and training with their chips. They are the leader in that space. So those are 3 core components you want in your portfolio, in addition to Meta, who has stellar earnings, you know, 35% growth year over year on their earnings. And so we see easily an $8.90 stock price in 12 months at the current pace of growth in Meta. Long story short, Brian.
Okay, Jeffrey, I was a little bit of a skeptic on that one, but I think you made a very strong case. Thank you very much. Good to have you here as we reach the closing bell. Have a great weekend. Thanks again, sir. Jeffrey Small.
Thank you, Brian.